Hey everybody, welcome to episode 56. If I was doing a sermon today, it would be secure profit, rinse, and repeat. I don't have a crystal ball. I don't control the markets, but I can track volume. I can track demands, and I tell you when a stock might spike, all right? I'm here to facilitate your learning, not mine. I'm here to provide you guys with skills, tips, episode 42, to make you the most efficient trader you can be. That's why I'm here. Lesson, let's hop right into it today, okay? Lesson, do not overextend yourself. What the hell does he mean? It means, I'll give you an example. Say you have $5,000 in your account, okay? $5,000 in your account. What do you want to do? You want to have about 500 or 600 of it in one position. Meaning, if you're going off an alert or you're entering an option position and you spend $240 and it goes down 50% and you need to buy 2 more contracts to average down correctly, episode 37, that means you're in for $480 all in. 3 times you're in $480. That's less than 10% per one position. I'm trying to teach you to diversify, okay? We have rules. I don't want anybody to overextend themselves, okay? You don't have to enter into every position. Somebody says they like something, or you like something, or you're waiting for something. Remember, wait for the sale. If you get 1 or 2 orders executed, you can put the others to bed. You don't have to enter 4 orders, because here's what's going to happen. You might have one good day, or you might have a bad day right away. If you're in 4 positions and you're spreading yourself too thin and you need to average down by buying double the amount of options. So let's say you bought 2, 1, 1, 1. All right, you're in 4 positions. Now you have to buy 4, 2, 2, 2. By the time you average down, you're going to have no money left. And then we say, oh, what about this new position? This is a killer. The UVXY just spiked. We're going to buy some puts. And you're like, I got no freaking money left. Do I sell this position, which I average down, it's down 25%? Do I sell this position, it's down 22%? No, the whole point is you don't get involved with every single position. You don't spread yourself too thin, all right? If you're new to joining, because we just had a bunch of people join on, please watch from the beginning, okay? Secure, rinse, repeat. But this lesson, do not overextend yourself, all right? I want to talk about specific positions that I was carrying over today because that was most important. Yes, we all wanted to know what was going to happen because the market was throwing up on itself pre-market, okay? And real quick, I did go out today, public Twitter, private Twitter, when the Dow was down 500 points and tech was down 230. I told you guys, I was confident the UVXY would go down. Why? Because the market's had 2 directions to go. They can either go negative like 750 and really throw up on themselves. And I already saw value and I already saw institutions buying certain positions. So I have certain trackers that I follow. That's why I didn't think it was going to happen. Now, when somebody asked me, what do you think the market's going to end at? I said the Dow would probably finish minus 285. Tech would probably finish minus 110. Well, I was pretty damn close. The Dow finished off 255 and tech finished off, 103 or something to that extent, 107 maybe. I said 110. It was right around there. The point is, always make predictions. If you didn't think that, then you thought the opposite. You thought the market would be down like 1,000 points. You thought the UVXY would spike to like $35, $36, $37. And it's okay to take an opposite approach, as long as you follow the rules. And when you're buying one option to test the water, then if you find a sale, you buy 2 more, you average down the correct way. Okay, but me. So the positions I held over from yesterday, UVXY, $29 puts expiring tomorrow. Any position that I had expiring tomorrow, which was UVXY, DDD, and STX, I got rid of today. And I'm going to tell you how I got rid of them. UVXY, I sold it open. I bought them for $1, right? They were up to $1.60 yesterday. I said I'm going to carry them over. What did I sell them for? 55 cents. I lost 45%. I was a wise ass. I carried it over even though I thought the UVXY could spike today, and I paid the price. The good thing is, so I lost all of my profit that I made yesterday. I made $16,500 yesterday. I lost $18,000 selling that position out this morning. I had 180 something contracts. Okay, so yeah, transparency. What happened today? I mentioned I was buying UVXY puts yet again, but I was buying them at a higher price. So first I alerted transparency, not an alert for the spreadsheet. So new people or people watch me on YouTube or people that followed me from Webull, okay? I have alerts and then I have my transparency trades. I trade 6 accounts for myself, okay? 5 of which I trade options in, okay? I trade bits and pieces of it. So when I enter into a trade, I said, this is my transparency trade. If I enter into a second position, transparency. The third time when I was averaging down, I said, this is an alert for the spreadsheet. Okay, so UVXY at 31.43, I thought it was going down. It spiked higher. At 31.50, I bought my second position. At $32 and like 14 cents or something like that, that is when I gave the alert. I said the $32 puts, which expire next Friday, the 16th, I'm paying $3.04. Okay. Where did they finish at? I think like $3.30. So by no means am I killing it. 10, 11% isn't crazy. And my other options, I think I'm up also like 8%. Not killing it by any means, but today was disastrous in the market. It was terrible. So yeah, I'm happy. I didn't get crushed. STX, real quick, okay? I bought, it dipped under 85. I said, I'm buying more options. It dipped to like $84.50. So again, I missed calling the bottom. So yeah, the haters will be like, you're an idiot, dude. You missed calling the bottom, sucker. And you know what I said to you guys? I don't care. I still like the position. And what happened? It spiked to $86.10. It spiked to $86.99. It even spiked to $87. What did I do? I sold my options that were coming due tomorrow. Any options I have for the 16th, July 16th, July 30th, and I have August options as well. I held onto those call options. Yes, I know the stock went back down to like 86.50, which is $1.50 less, right? $1.50 less from where it was. I would have loved to have saw all of them, but I didn't think that I was going to need to. I just safeguarded myself. If I sold the ones that were coming due tomorrow, I don't have to worry about it tomorrow. So my big concern at the end of the day was UVXY. And I said, what am I going to do? What am I going to do? Is it going to spike? Is it not going to spike? I said, if it goes to 31.15, I might sell. I ended up holding because I had to pick up my girls from camp. I had to. What else did I mention today? Public and private Twitter. SRNE, Sorrentino Therapeutic. The same one I made fun of Russ yesterday for buying too early because I said he didn't call the bottom. And if I was going to buy that, I would have bought it around 3:50 p.m. No, I didn't know there was going to be a spike today. So I only acknowledged it at $8.70. And I said, you know what? There's some activity there. Do not be surprised if you see an afternoon purchase and the stock goes to $9. Guess what? I was wrong. It only went to $8.99. Yes, I was off by a penny. And if you set your sell price to $9, it never got executed. $8.99, you did. Okay. I had no position, but I tracked volume, I tracked demand, and I know how institutions purchase stock. So when I see one purchase, and I'm pretty sure it's an institution or a hedge fund, and I know they have interest, they're waiting for a good dip. They're not trying to push the stock up. They're not like AMC apes. Their intention is not to get the stock as high as possible. Their intention, any banks, institutions, hedge funds, any big money, is they want the best entry. So what I'm trying to teach you guys about getting the best entry, that is how they trade. So when I say we're going to disrupt the way the institutions trade, that we're going to change the way they think about the retail trader, it's because there are 30 million of you out there. So what I ask you is, please like my video, share my video. If you have $3.49, join my platform. You can check out my spreadsheet. I was on fire for 9 weeks. I had a tough 3 days, but things have settled down. China threw up. I don't control the markets. Again, no crystal ball. But please, I'm going to give you one more example about averaging down, okay? Here's how you average down, right? Let's say you like an option and you buy it for $400. Real quick example. So you're in for one option, $400. It goes to $260 and it goes back to $405. We all see the dips and then we know it recovers. So you bought it at $4. It dipped hard. You were down like 40%. And now it finished at $405 and you're up like 2%. Okay, that's true. Actually, 1.5%, something like that. Now, here's what happens if you average down, okay, according to Matt. All right, you buy an option at $4. It drops to $250. You buy two more contracts. That's $500. You're now in for $900 and you have 3 contracts. So you're in for $300 a piece now. It spikes back to $405. What do? You sell it $4. You claim 33%. You're in for $900. So you just made a third of that. You made $300. If you're in and you don't average down at 400, guess what? You're up $5. So you're up $5 or you're up $300. You average down and you're out of the position at $4 or $4.05. If you don't, you're still holding the bag and all you did is go for a wild ride. You were upset when it dipped and you're so happy that you're even. If you're happy you're even and you didn't average down because you don't have money to average down, then you're not following the rules. So again, earlier on, I said, don't spread yourself too thin. That's what this episode's about, not spreading yourself too thin. So I want you to have 10% of whatever your portfolio is worth. It's worth $4,000. 400 should be in this position. If you buy an option for $240, that's the only option you should own. If you need to average down, then yes, you can go a little over 400, but I don't want you owning more than 3 options. You should be in for like $500. Your account's worth $4,000. That's 1/8 of it. All right. That's like 0.167%. The point is you're not going to blow up your account. If you're wrong about any one trade, you can blow up your account if you average down the wrong way. you can blow up your account, okay? So please, if you like this, subscribe to my YouTube channel. If you like this, you can also join my platform. That's cool as well. It's $3.49 a week. I show you results. I think we're going to get into some slides right here, and then we'll get into some questions. So let's go right into some slides. All right. Yes, dude that follows me, he is a lifetime member, but he has an account for his daughter, and I think he started with $100. Point is, he follows the rules. Now, here's the rules. Planning ahead, okay? So we look for a spike in whatever stock it is, and we set our ask price. So it doesn't matter if your option is selling for $105. You set the ask for $160. If the stock spikes just for a second, a computer or an algorithm will trigger a buy, and somebody will pick up your option for $160. When the stock goes back down the next minute, it doesn't matter. Why? Because you already sold it. So it goes from 105 to 160 back to 120. Who's had options that done that before? Me, I'm raising my hand. My options always spike, and if I don't have a plan to sell, I'm still holding. It's called riding the elevator. So the point is, his daughter's account is up up $145 from 100 in a couple of weeks. He's hoping to get her to 1,000, okay? And I think his daughter's really young. I think she's like 10, 12, 13, something like that. All right, next slide, please. It's great what you guys do for your kids. Seriously, you get them investing early. So smart. All right, let's get another slide up there, Carlos, if we can. Jude reached out to me on the side. Now, granted, I hate DMs, okay? He told me he was upset last week, so he made some negative comments on Webull, which is a platform that allows messages. Then he said, I thought STX was going to 90 last week. And yes, I was hopeful it went to 90 last week. The markets threw up on themselves on what? Thursday and Friday. They threw up on themselves today. STX is holding damn strong at what? $86.50 again. It went to $88. So we sell. The point is, he told me his cousin used to work for Lehman Brothers. His cousin doesn't help him. And yes, he mentioned he was up like 70,000 last year. Everybody was up last year. Nobody missed. If you were in the market from March 2020 to January of this year, or February, actually, when it was frothiest, you were killing it. Nobody needed people like me, especially you didn't need me. I'm going to help you invest and safeguard your investments, okay? Other gurus are going to give you stocks. At least they're giving you stocks. Me, I'm telling you how to invest and how to average down. You didn't need that shit last year. Why? Because the markets were on fire last year. Nobody was averaging down. If I was involved last year, I just would have been investing in Tesla. I only got investing in like August again. I was on the sidelines. I hated institutions. I never wanted to dabble in the market. I had my positions. And then I'm like, are they kidding me? There was such market manipulation. And I'm like, there are 30 million new traders out there, some of which come from unemployed. They had a job. They're trying to support their family, their kids. Yes, and people say, yeah, Matt's full of shit. No, if I was full of shit, I wouldn't charge $3.49 to join my platform. I believe in transparency. All my rules, all my lessons, they're all on the website, okay? Other people that come on and they talk about different stocks and they're like, hey, this is going to do great this week. How the hell do they know? They're not watching the market. They don't see volume and spikes. All right, let's get another slide in there, please. Oh, yeah, this is just me proving to someone. Someone said, yeah, dude, you filed for bankruptcy 3 times. I filed for bankruptcy once in 2018. I came clean about it on a different episode. I don't care who sees this. Yes, I ran a bad order through China. Of course, China screwed me again. Point is, I trade a lot of money. This is one of my 6 accounts. I trade 5 of my accounts, have options in them. Next slide, please. I was just showing, I'm so sick of people making comments. I don't have to prove myself to anybody. If I charge you thousands of dollars, yes, I better be right a lot of the time. My spreadsheet's still on fire. I think I'm not 82%. I think I'm 80%. Okay, this is my alert pre-market. All right, pre-market, I give this out. I said I'm purchasing 3 different stocks, DDOG and Net, which are cloud service companies, and Square, because Square was beat up like 4% pre-market. All right, then I tweeted out my position when I got in, and I think I might have a slide. I might not, but DDOG, I'll tell you from memory, DDOG $104. I think it finished at 106. NNet 101.80 I paid. I think it's like 108 or 109. Yeah, it's up 8% since I tweeted about it. The morning opened up, the stock market dipped. I bought all my shit. These 3 stocks. All right, next slide, please. It was great. Okay, transparency, STX. Again, I didn't call the bottom, but I tell my people, hey, I didn't call the bottom. It just went down. There's a 10-minute rule if you're part of my platform. I buy something, it goes down 10 minutes after I buy it. It doesn't matter if it's crypto, stocks, options, whatever I say, it goes down. I think I'm calling the bottom, and it always goes down. So STX, I thought it was 85 the bottom. I bought more options. It went to 84.51, I think. My options look like shit because they expire tomorrow, and they were $85 strike. When it spiked to $87 or $86.99, I sold my options that are coming due tomorrow. I secured profit. So people are like, yo, STX is down. I know he still has options. He's riding that shit. No, my options that expire tomorrow, I secured profit. My options that go to next week, yes, I'm hoping STX, I'm not going to lie about this. Give me a good market. Give me a green market, because you know where STX is going? It's going north of like $91. And if it hits 91, it's going to 94. And if it hits 94, it's probably going to 97. So yeah, screenshot this. I'll leave this shit up forever. STX. Boom. Next question, please. All right. DDD. So this is another tweet again. DDD turned green. It was shit to start this morning. It was down 5 or 6%. So when it turns green by what? 2%, I get the hell out. I had positions that were getting crushed. It's not that I don't support the stock. It's not that I pump and dump shit, okay? I'm an investor. When you're an investor and you're red 40% and the market opens up and takes a shit on itself and your stock, DDD, is down 5 to 6%. When it turns green and you're ecstatic because you see some buying, when there is demand for your stock, that is when you sell your options. When people are buying the stock, they want your options. Your piece of shit option that was a turd this morning all of a sudden looks like a brick of gold. All right, the stock's going up, and I'm offering $35 calls for like 80 cents, and people are like, I'll eat them up, right? I think it actually went to 34.70 or something like that, and that's when I sold my options, and then it went back down. Yes, so you plan ahead. As it's spiking, I'm preparing to sell my options, to exit out of a position that is tough. All right, it was a beat-up struggle. All right, next slide, please. I'm just trying to educate. Oh, so here was the tweet that I sent out at 11 a.m., just so everything's timestamped. The Dow was down 500, the NASDAQ down 230. Two options, 50% it gets worse, 50% it gets better. I'm bullish, okay? Yes, I'm a contrarian, but again, if it goes down, and here it was, 285 and 110. So what did it finish? 255 and like 103. And the UVX should go down from 32.10. And yes, it went down over a whole dollar, 30.88. So again, it makes sense. I don't give a shit about after hours. If somebody's telling me the UVX is spiking right now, I don't care. Dude, we saw the worst today. You think tomorrow is going to be worse than today? I'm asking you guys, if you think tomorrow's going to be worse today, you're crazy. You're crazy. Today was shit. All the Chinese companies threw up on themselves this morning. Now, guess what? As they were throwing up, you guys said to me, how come there's more inflow for this stock? How come there's more inflow for JD? How come there's more inflow for Tiger? Yeah, why do you think? Because the institutions are buying it. You guys are giving them the stock, Tiger, at $19, at $18.90 something, at $18.80 something. It's back to $20. I assume it ended at like probably $19.98. That would be my bet. All right, next slide, please. Let's look at Tiger real quick, see if I can find it. Here it is. Oh, $20.22. Yes, there's support. I don't know why I'm showing you the UVX. Oh, yeah, because I was telling people that this is a triple top. The great thing about the UVXY, right, which is the volatility index, that I like to buy puts. Yes, other people that bought calls, if you had calls last night, which some members did, they made a killing. I think they made 200%. The point was, all I know about this ETF is it always goes down. So yes, it spikes. When it spikes, I want nothing to do with it. I want to call the top of the spike every time. The UVXY, when it spikes, I'm buying puts. Now, the thing I learned about the UVXY, because I study it, is it goes up for 3 or 4 days, and that's it. Then it goes down. So although it was up today, there was selling, meaning there were shares that was outflow. So I expect it to go down tomorrow. My price target for next week, and yes, you could snapshot it because people on different platforms will be like, this dude said it was going this. First off, I never suggested buying puts at $28. I always suggest in or at the money. So when I bought $29 puts, which I made money on yesterday, and then I carried some over, 29 was a safe play. This morning, I tweeted pre-market, I was going to buy 31, 32, or $33 puts because I didn't know how hard it was going to spike. I thought it would spike to $33.50. So yes, I carried over 100 options, but I said it could spike 18%. So I'm not a hater. I thought it could spike. I wish it spiked to 33 because I would have bought a shitload more puts. I'm in for about what, like I think $18,000, and I carried it over. I mentioned already I was picking up my girls. I didn't want to sell. Then it spiked to $32 again. So if you missed your opportunity for puts, you had it again. And what happens? 2 minutes to the market left. Ton of market in flux, right? Ton of money going in. You all saw it. Look at the inflow of the money for the last like 5 minutes of the day of the market. So what happened? UVX went down. Now, dumb people, I'm sorry, not dumb people, who don't know what the UVXY is, they say, oh, this stock is oversold. It just got oversold. It's not a stock. It tracks volatility. So the people at the end of the day or that are buying it after hours think it's going to be a short squeeze. That's not how it works. So if you ever hear the word short squeeze in any ETF, it doesn't happen that way. There's unlimited shares. All right, next slide if I have any. All right, yeah, here was the alert. So I just give out alerts. Here was the actual alert. So again, I bought, then I bought again, transparency. I tweeted to everybody. I bought 2 positions. I even posted on Webull. I bought 2 positions. Then the third one, I said, this is an alert. If you have not entered into it, this is going on the spreadsheet. I am very certain about the stocks I want on the spreadsheet or the plays I want on the spreadsheet because I want to be as close to 100% as possible. I was at 82%. Now I'm at 80%, which means I closed out 2 losing trades. This one, I want it to be a winning trade. Next slide, please. All right, yeah, options update. So I tell you guys, UVXY, again, this is just how I share. 2 times, then the 3rd time was an alert. It's on the spreadsheet. Now you can see my spreadsheet. Options on the left, stocks on the right. I do have open positions, but my shit is green. I know what the hell I'm doing. I know how to average down. And when I close out a position, I close it out for profit. If you close out a position for loss, then you're trading the wrong way. If you close out a position for loss, then you're probably riding up the elevator and down the elevator. And that's not how we trade. All right, I think I'm done with slides. Yeah, we'll save anything else for tomorrow. The point is, if you're riding up, if you're up 20% and you're calling your buddy, you're like, dude, my options are crushing it. I'm up now 98%. Then you're doing it the wrong way. When you're up 98%, you should be putting your order in to sell at 98%. So when you're up 50%, you go, great. If it goes to $4.28, I'm going to sell at $4.30. That's what your option position is. So when it spikes, you're not calling your buddy. You know what you're doing? You're looking at your computer because it just went ding, 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 ding. And you're like, what? Oh, I sold it. I made 58%. I made 80%. Anybody that doesn't make it, anybody that rides the elevator up, down, you must be stressed because you must be tired. It must be like walking the steps. Now, I'm going to tell you what the difference is, right? Somebody in my platform will go into UVXY puts today and go into the same position 3 times. They won't kill it. They'll make 15%, 18%, and 12%. But if you add it up, it's 45% profit. They're never in it very long. And yes, they have a day trading account. So Matt, what if you don't have a day trading account? Then what can you do? Well, if you don't have a day trading account and you have a small account, first of all, do not waste your day trades. All right. Number 2, keep most of your money on the side. I don't care if you have $1,000, keep $1,000 on the side. When you enter into one position and you're entering an option position and I pay $320 and you say to yourself, I'm going to pay 10% lower. I'm going to put in for $290. So you're paying $290. If it drops to $2 or $190, you're buying 2 more contracts. Now you're in for $700. The point is you need to average down correctly. If you don't know what I'm talking about, episode 37. All right. If you want to get max profit, you don't know how to get max profit, you want to use a spreadsheet. Episode 42, somebody said to me, which episode should I watch? I'm going to give a bunch of hours. I said, watch my episode yesterday. I talk about every day, 5 or 6 episodes that you should watch if you want to get better trading. If you're here watching me and you want to get better trading, I'm going to give you it right now. They're all Ask Matt, which are my live sessions. All right, number 3, number 8, options. If you want to get out of a shitty stock position, I mentioned it before, episode number 14, okay? If you want to average down correctly in options, 37. If you want to learn about ETFs, you hear me talking about UVXY, you hear me talking about SQQQ, SDOW, TQQ. I speak about that. I believe it's episode either 17 or 18. All right, remember the light bulb went off, and I said, F this. We're trading stocks like whatever, and they did an offering, and they just screwed us. They did an offering. Now we have to sell and secure our profit tomorrow and get out at 20% instead of 100%. Screw this. I've been timing the market correctly. I tell you when the market's going to rebound. So I don't need to tell you the market's going to throw up on itself, right? Here's the catch, right? Say we have all our money on the side and the market throws up on itself. All I have to do is be right when I say the market's down 500 points. It's either going to end down 280 and 110, or it's going to end down 1,000 points and 400 for tech, and everything will explode. So you're either very bearish or you're bullish on the recovery. If you can call the recovery with the SQQQ, puts, SDOW, puts, UVXY, puts, that's all you need to do. One trade. Don't spread yourself too thin. If you don't know what I'm talking about, watch this from the beginning. I talk about small accounts. Trading 500, not a problem. Just trade the right way. If you do one position for 200, one position for 200, you have $100 less. You need to average down. You can't. You're going to sell one of your positions. You're both down like 40%. Which one do you pick? You pick this one and you average down on this one. Guess what? The one you sold shoots up. You would have made a fortune. The one that you average down on goes into the shitter. Your account's dead. $500 to 0. So the point is, if you don't screw yourself by making yourself too thin, if you don't spread yourself too thin, right? Just take one position. If the only position I was going to take, and I've only been speaking about a certain number of stocks. So anybody that's following me, I've been speaking about STX, and I've been speaking about UVXY going down whenever it spikes. All right. And I do mention other things. When I see volume in Sorrentino Therapeutic, I mention it to you guys. When I buy certain option position, and Knox went down since I bought it. It's down about 6% since I bought it. I don't care. I'm still owning the January options. Apple went down today. Yes, it had a couple of good days before, so I'm still positive. But again, January options, Carnival, Delta, right? October, September, and January options. All right. That's why I'm not worried. I'm zooming out. Now, the good news for anybody following Chinese stocks, I know we hate Chinese stocks. We hate them. I mentioned it Tuesday morning, and I mentioned you can't trust the Chinese stocks and their data breach and their security, and they're going to screw the U.S. And when did they do it? They did it over July 4th weekend. You don't think that's intentional? Yeah, and somebody else mentioned the coronavirus. Where did that come from? Oh, it came from China. You don't think that was intentional? Again, I don't give a shit if it was intentional or not, but the U.S. needs to stand up for itself. It needs to make a statement. It needs to not get bullied. And if we know it, we don't want Chinese companies in our markets, then we tell them, go do your own shit. What about free capitalism, right? If the Chinese government is trying to screw our investors, then we have to stay away from these companies. It's as simple as that. If we can ride a momentum trade, fine. But other than that, we're probably going to stay away. All right, so let me see if we can get some questions here. Nathan, I love eBay. Okay. My option was down 51% in eBay, so I averaged down today. Think it'll bounce to $71. Yes, I'm going to look it up, though, to see where eBay finished. It's right here on my front, 68, 65. So I don't really worry about the spike after hours. I ignore that. I'm going to look at the 1 month. Looks like it was consolidating today. Again, so the market has been rough. So let me tell you, 1, 2, 3, 4. 4 out of 6 days there's been outflow. But keep in mind, right? We've had Tuesday, Wednesday, Thursday this week, and Thursday, Friday last week was shit. So every stock is going to be shit for Thursday, Friday. So when I say the last 4 to 6 days have been outflow, that's probably true for every stock. And a lot of stocks are probably 5 out of 6 or 6 out of 6. All right. I happen to like eBay. Maybe it went up too quick. So it consolidated right around today's number. What was the low today? 68.38. So yeah, I mean, it probably finished near the low today? Let's see. Yeah, it finished near the low today, but again, volume was pretty light for eBay. So yeah, I still like eBay. eBay is a beast. Meaning, I sold eBay options yesterday. I re-entered them yesterday. I secured 98% yesterday. Then I was up 35% yesterday. With the stock off 2%, I bet I'm even on those. I didn't check them out today. So let's get another question. Oh, yeah, if you have a question and you're late, there's something called super stickers where you ask it on the side or whatever. I know the rich Zip Trader and all those other mass traders, they get like $20. I get like 20 cents. But, money's money. All right, at Matt. Besides volume, what indicators are you using to pitch your entries into a stock? Why don't you talk about RSI? Because I don't really use those. I'm not going to lie. I don't use that. I don't use it to pick exit points. Why? Because you'll look at like XL, right? XL, the RSI is so low and it's been floating low, which is crazy. That line's like that. So it's not about that. It's really about demand. So I call it my volcano effect, meaning if I see institutions buy, and I mentioned one cryo stock. Now, why do I like cryo stocks? Because it's so freaking hot in the West. So I'm going to actually give you a stock right now that I like. And I went to buy an option today, and I bought the wrong strike. I don't know if I see the stock actually. Here we go. Cryoport, right? CYRX. It's off 3.57% today. But guess what? It's at 59.77. It was 59.14 when I gave the alert to buy the option. Now, somebody bought the option and made 33%. I'll show you the slide tomorrow. Point was, I tweeted out, I'm buying the July 23rd option at $59. I was paying $2 and change. I forget what it was. And somebody said there's no activity on that. First off, Webull is always slow. If you're looking for options or updates or pricing, they're always 15 minutes late. If they tell you there's no activity, they're full of shit. You have to look at the end of the day. You'll see the range. You'll see the volume. Point was, I was looking at the July 30th ones. I thought I was looking at the July 23rd ones. So my option did not get executed. So I never put it on the spreadsheet. But other people bought the option and bought other options in this stock and sold and secured profit 33%. The point is, it's not an alert. Oh, actually was. It was going to go on the spreadsheet. But I would have shared transparency anyway. I share when I like something. When I see a dip and I think it's a good entry point, I share it. Now, if someone says, is this a good entry? What strike price are you buying? Well, you're too freaking late. It's more about timing. We're looking for the biggest dip, okay? So I simplify it. I don't use RSI. I don't use the MACD. I don't want to confuse anybody, all right? If you understand that and you want to use that and it helps you, great. We don't need to do that. We need to track inflow, outflow, okay? It's like red or green. I make it so easy. Then I show you the size of the volume. So we look at the 1 month chart. I make it easy as pie. So you could be half blind and you can still figure out how to trade. All right, next question, please. And that's what it is. Oh, yeah, super sticker. Thanks for that 99 cents. I will buy half a soda. All right, STX, some crazy moves. All right, I'm assuming you're wondering, not wondering, but since everybody got double top, if tomorrow will be bloody for it. No. So here's the great news, okay? Psychology of trading. If you guys think that the market's going to throw up on itself tomorrow, and I haven't looked, but I do know how the market ended today, okay? So if you're new with me right now, the market ended the last 5 minutes. There was strong inflow, all right? What does that tell me? Well, the market threw up on itself this morning. That was the worst it's going to get. I'm going to assume that tomorrow is going to be better, unless there's some Biden news or employment news or something that can actually tank the market, or a war or an oil shortage or whatever, and OPEC's doing this, or plane. I don't even know what could happen. But without any craziness, I'm assuming that everything's going to be green tomorrow. I'm assuming both NASDAQ and the Dow, because it has some making up to. Delta turned green for a second. I'm assuming Carnival, JetBlue, I'm assuming they all turned green. They probably finished red. So they have some making up to. Let's talk about Plug. Again, my position's in September options, so I'm not forcing Plug down anybody. But I saw Plug. It wanted to turn $30 and be positive. Now, somebody asked me about Plantier. We might have these questions on the side, but I told you yesterday somebody was buying huge put contracts at a $23 strike for Plantier. It doesn't mean I think it's going down. I'm just sharing information. I tried to disseminate as much information as I can share. I try and simplify it. Remember my goal here, okay? Number one, to keep it simple, because everybody likes simple. Number two, to level the playing field, okay? And yes, I appreciate everybody's support. I know there are some haters out there. So yeah, STX, I don't see it throwing up. Again, if there's a hesitation or a sell-off, because it was strong this morning when the market was shitty, it was strong. It's telling you it's had enough. So how I found STX, it threw up on itself for 13 straight days. So it's not going to turn around instantaneously. So there was a dude I mentioned before, and I showed the slide. He was upset at me last week. STX didn't get to 90. But remember, Thursday and Friday, the market threw up on itself. But I said the buying and the demand will come back. And no, it's not going to rush back today. The market was ugly today. So yeah, it doesn't surprise me it sold off the end. Again, I sold my options when it spiked. I mean, we figured that out, right? Why can't everybody else? So they did. So it slowly sold off. Now, I thought there might be a late day spike. But if not, I mentioned the one thing about STX, and you'll see it on every one of my videos, there's a ton of pre-market activity when it's doing well, all right? So when STX is doing well, when I mentioned it was 64 to 104, I never got in day after day because every morning pre-market it was up like 3%. And I'm like, I'm not overpaying for this shit. And I kept saying, I'm not overpaying. And by the time I was done saying it, it was $104. So it was on my watch list. And as it went down, I'm like, almost. Remember yesterday or 2 days ago, I finally averaged down on Delta and Carnival. It might have actually been yesterday. The point is, I waited 2 weeks. Still, the Dow threw up. I wish I got into Carnival at $23 today and Delta at like 41 change. I mean, it would have been freaking great. All right, next one, please. Next question. I like STX. Hey, thanks, Tyler. I could buy. Okay, can I look at 7K metals? Sure, dude, but I hope it's called 7K metals because I try and keep it simple. And if it's not, it's got to be a stock, right? 7K. No, it's not coming up. So I don't know what it is, man. Can you 7K metals? I don't know what /2G. You want me to go to a website and look something up? I mean, I guess I'll do it for you. 7K, but I don't know if it's a stock. What is it? 7K metals. I'm just probably going to swipe my phone. I'm probably getting a virus now. It's like, does anybody else know what it is? It'd be great. I'm typing it right now. 7K metals. It's opening. Select my location. Well, I have no clue what this is. If you explain this to me, I'll tell you what it is. But right now it wants cookies, and I don't know what it is. So I guess we'll go into it tomorrow. Hopefully you can write a little more, like a paragraph about it, and say it's a website. Maybe it's a crypto exchange, or maybe it's a commodities exchange. Metals, I'm thinking aluminum, copper, silver, gold. Maybe it's a commodities exchange, and you're asking me what do I think of the trading platform. I don't know what the platform is, so I can't tell you if it's good or bad. But I would just Google it. Top trading platforms for crypto. Top trading platforms for commodities. I mean, they're there. Just make sure you know what you're doing, okay? My father used to own a commodities firm back in the 1980s, okay? He made a ton of money for his clients, but he did shitty for himself, okay? Everything he picked for himself, horrible. His clients were like rolling it, like, dude, you're just awesome at this. And he'd be like, gold, and gold would go down. All right, next question. All right, wait, can I buy just TQQ to hold it like a stock? You can, okay? However, ETFs get a little bit of expense eaten away. So people don't really hold ETFs for that long. But if you wanted to do TQQQ for a long time, I would say, okay, look at January calls. But I'd rather you do it on a weekly or bi-weekly basis. So if you do call options on the TQQQ, like we had some, we remember we had the $100 calls that were coming due June 18th, $100 calls. I think the TQQQs at like what, 122, 121, we had $100 calls. Imagine our contracts would be worth $2,100 each. I think we paid like $300 or something like that. So yes, if you think the NASDAQ is going to spike that much harder, I don't think that's a great idea though. I think shorter term, if you think the NASDAQ is going to spike, I'd probably look and keep in mind, when you look at the NASDAQ, it's the FANG that controls the NASDAQ. So yes, Nancy Pelosi, a lot of other politicians are in like Amazon, Facebook, Netflix. Remember I was talking about Netflix at $4.97? What is it, like $5.37, $5.47? There's a time to get in, not after it makes a 10% run. When I said tech would be strong for the next month or two, I said tech stocks could go up 15 to 20%. Well, guess what? A lot of them have been up 10, 12%. It's consolidating. If you like a stock, I like Roku. Okay, Roku's got to be what? I'm going to look it up because I'm giving it out, so why not look it up so I know if I'm right? Screenshot this, anybody. ROKU. And I'm hoping it's down. Oh, it went up today. Because I know it was like $412. It was as low as $405 today. Are you shitting me? See, where is this? I missed this. I mean, last 5 days, yes, it dipped. It probably opened up low and it probably shot up and then consolidated. It was as low as 405. It went as high as 427. Do the freaking math. 20-something points? What is that, like 4 or 5%? Roku's in demand. I bet today was an inflow day. Yeah, no doubt. It's consolidating. If you want to know what consolidating is, it's when the chart looks super. Roku was going up to like 491, and then it pressed down to 400. It's consolidating. It's finding a new baseline. Let's get to another question. So I'd rather, James, I'd rather you pick out Roku and something else. I guarantee Roku's going to be at 500 before Netflix gets to 600. All right, so Roku's at 420. Let's look at Netflix. Somebody want to take that bet? If anybody on my platform would like to take that bet, just tweet me, okay? I'm going to look up Netflix right now. Here it is. Netflix, 530. So here's the bet. I bet you Roku goes from 420 to 500 before Netflix goes from 536 to 600, okay? Anybody want to make the bet? I'll give like 30 minutes of tutoring around. Last bet, I got a dozen chocolate chip cookies. I never actually got the cookies, but the dude owes it to me. Justin, you owe me some cookies, bro. All right, thoughts on family on two-leg options. They cost less for small accounts. Thoughts for the family on two-leg options. I'm not really sure what you're asking me about two-leg options. They cost. Are you talking about like options that are out of the money or something to that extent? That's the only options that I know that cost less. So if you're talking about an option that's like something like Apple calls at $160 that expire in 2 weeks. Yes, if Apple goes up $3 today, your calls will go up from 8 cents to like 16 cents. You'll make 100%. If Apple goes down, your calls will be worthless. So yes, small accounts can trade shit like that, but it's risky. So every day when I come on or I tweet, I mean, the only thing I've been tweeting for like a week straight, and I was tweeting it since like last Tuesday when I thought the market was a little dangerous and turbulent, is I said, remember, we secure profit. Remember this, remember that. Then we had 3 shitty days. Everybody's feeling bad about themselves. The market threw up on themselves. I got a couple stalkers and people that are obsessed with me saying, yeah, you're making people lose money. No, that's not it. We just had a plan. If the market goes down every single freaking day, then everybody's going to get rocked unless you're a bear and all you did is buy puts. But if not, if you average down the correct way, episode 37, have I said that enough time? All right, spread options. Oh, spread options? No, I don't. I mean, I get what you're saying. So let me explain it to everybody else. That person's saying like a call spread, meaning they'll buy calls at $35 and they'll sell the call at $40. Now, here's the problem. Some platforms are tricky. So you're like, I want to sell my position, but then it's like you're selling your position as it spikes. So unless you're letting the other position expire, okay, then your problem is like, okay, let's say your option expires in 2 weeks, okay, and you have $40 calls and you sold the $45 calls, and the stock goes from $30 to $44. So yes, the $45 calls aren't in the money, but you're like, I want to take profit with my $40 calls. So you take profit. So now you have to buy the $45 calls, which are also up. And the good chance, because they were further out of the money, they're up a greater percent. So you made 50%, they're up 60%. Guess what? I mean, it's just a frustrating thing for me. Every time I do that, I get so frustrated. Or it goes down and both my option and the option I sold became worthless. And I'm like, great, I lost money. So it just upsets me. I would rather sell covered calls, meaning if you have 100 shares of stock and you're going to hold on to Apple, Amazon, whatever it is, Sell one call that's way out of the money. Make $40, make $80, make $100. Do it over every month. That's an extra $1,200 in your account. Anybody that's holding stock long term, you should think about that. If you're holding stock long term and you don't want to be and you want to free up some capital, watch episode 14. I tell you how to cut your costs from, like, say, you had 1,000 shares of Carnival at $25 or $24. Save $24,000. Put $5,000 into January options. Done. You have $19,000 on the side. If Carnival goes to, like, whatever I say, anywhere from $35 to $55, guess what? Your options are going to be more valuable than your stock would have been. All right, next question, comment, please. Thank you, Amy. I'm sorry. It's been so long since whatever. All right, Matt, I got some August Tiger calls. You're getting crushed 30 and 25. I've averaged down once already when it's 65%. I'm down 55%. All right, so you averaged down once. I would have, it's retrospect, but I would have told you not to. Tuesday morning, I tweeted, China's getting crushed. Who the hell thinks that the market turns around overnight? Do you go from hating China on Tuesday to finding value on Wednesday? No. China sold off Tuesday. China sold off Wednesday. China started to sell off today. It was only late in the day that we saw China start to turn around. So I would only have thought to average down on that option late today. So someone says to you, dude, you got July 16 options on Tiger, $30 and $25. I said, first, yesterday, I made a mistake buying the $30 options. They were out of the money when I bought them. And who's suffering? Me. $30 options. Why the hell did I buy out of the money? Stupid. So the $25 options, yeah, they're still suffering, but what's the stock's at $20.22? So yeah, there's potential that stock can move, good 20% if the shit with China, works its way out. So what would I have done? Okay, here's what I've done. Say you bought the 35 or the 25 and you had 1 and 1. I would have averaged down the same way I bought options. I bought the $20 strike on Tuesday and then I sold Wednesday for a 20% gain. So if you wanted to buy it today, say it was at like $19.98. We were looking at it. It was trying to break 20 and you wanted to buy it. You'd buy the $20 options. All right. And when the stock goes to $20, $22, $23 next week, which is totally possible, maybe even 24 or 25, the $30 options and the $25 options are probably going to be worthless at the end of next week. I mean, I already tweeted it. I said it was probably worthless, and I'd probably end up selling them today. It was too cheap today, and the stock wasn't moving. If the stock spikes to $22 tomorrow, I get any type of good move, I will sell my option and take the pennies that I can get. I would rather have the $20 options. So your two options are, you average down by buying the $20 options expiring July 16th. If you think Chinese stocks are going to turn, I'd rather give yourself more time. I'd rather you buy the $20 or $22 calls for August or September. I'd rather you spend double the amount of money. So instead of averaging down the first time here, say you put in $500, say you put in $700, you double the amount of money. My investment was $700. I'm going to put $1,400 into the new position. Let's say your investment was $1,500 now, okay, because you averaged down. Again, I would have held off on averaging down, which I said, but let's say you have $1,500 or $1,600. Double it, okay? You put in $1,600, it's worth $1,000 now. I get it. You're down $600. That's how you double it. You take $1,600, you double it, now $3,200. You go out to August or September. You buy the options at $20 or $25 strike if you're buying like September. When the stock rebounds to 30, 32, 34, yes, I don't think this China thing's going to be forever, unless they don't want us to invest in their companies, but they need us. China needs us. The U.S. needs China. It's a fact. I don't know why they're playing this bullshit, and I don't know why our president doesn't respond in kind and do some shit. Yes, if I know that's going to happen, I'll either stay out of the market or I'll buy the UVXY calls thinking the market would spike. But the president needs to do something. We need to stand up as a country and claim our independence, whether it's business, materials, whatever it is. We need to be self-reliant, okay? Remember, I guess you guys might not remember, but years ago, we used to be totally reliant on gas and oil from the Middle East. That's why we went into Iraq, because they had the oil fields, right? I mean, if you guys don't know it or it's not in the history books, that's why it was. I don't know why I got sidetracked. Let's go on to another comment. No wonder we don't get to enough questions. Hey, Matt, what are my thoughts on AI? So, yeah, thoughts on AI. I mentioned I love AI. I still love AI. I still think AI is going to $71, $72. I don't have to look at the chart. I know it was almost rebounding to green today or positive. If you liked AI or you like NNOX, you were looking to buy, let's use NNOX as an example. You were looking to buy it when it was off 6% this morning. If you like DDD, you were looking to buy it when it was off 6% this morning, not when it spiked up 2%. That's an 8% move. If you have options, it's like 70% if you call the bottom and the top. That's how we sell, because we know shit doesn't go only up. So if we get in someplace and we're like 55%, I'm out. And people say, yo, 349 family, they're in that stock. F them, right? No, we're in, we're out. We're in, we're out. If you don't have a day trade, then some trades you can't do. But if you enter into a 2 p.m. trade, or let's say UVXY puts when it spiked at 3:50 p.m. and you're like, shit, I'm buying puts at the end of the day. I don't care. Great, you carry it over to the next day. So yeah, I'll look up AI for you, but I actually like AI. So let's see where AI is. I think it's going over $70, probably to 72 soon. It actually had inflow today. Oh, it went up. I didn't know it was even green today. I said it almost looked green today. Let's look at it real carefully. Yeah, I mean, it has a great daily chart. There was tons of buying at the end of the day. But if you liked it, you understand AI finished the day at $58.50, right? I think it'll be at 60, 61 tomorrow if it's a green market. The point was, it was $55. So if you bought it 55 and change, $56, it goes to 61. You're going to make 10% in 2 days in just stock. Same with options. That's why you only need one option position. Now, I'll mention AI because I had AI options, $55 calls that expire next week. I think the 55. They might be the 56. I think the 55. I paid $6. They were up to $12. I was looking for 15 to exit out. And instead of $12, it went all the way back to $4. So I went from 4 to 6 to 10 to 12. I didn't sell. I was looking for 15. Greedy SOB I am. And it went down to $4. I didn't average down because I was so pissed. I don't know. I'm not going to lie. I was just busy. All right, next question, please. Yeah, I like AI. I like NNOX. All right, you've asked me about this one before. I don't like PlaySafe. I thought I heard it mentioned in like a meme stock terminology or something like that. I'm going to check out what the demand's been like. 4 million volume. It usually does 7 million. It's $11 a share. And let's look at the 1 month. No, the volume's so light. Ever since it spiked, which is probably a meme play on like June 24th, where it had probably like 24 million volume. It's been sold off every single day. Now, today was the first day in a long time that it had inflow, but I would stay the hell away from it, bro. Chris, I know you like your bacon, bro. If you go into this stock, there's a good chance you lose 10% of your bacon, and nobody likes less bacon, bro. Next question. Will it pop? Yeah, if you buy 1 million shares, it'll pop, but I can't buy 1 million shares. Sorry. Throwing a one-liner for finance people. I mean, that's not even funny. All right, thoughts on your Ford $15 calls. Okay, so I heard good news from Ford, and they still sell it. I heard people are buying puts on Ford. It had inflow today, and it still lost 17 cents. I can tell you that there are short people on Ford. All right, there are institutions or hedge funds that are short Ford, and they've been short Ford since Ford was $17. All right, that's why you see it struggle. Even when it pops and it goes up 50 cents, and at the end of the day, it's up like 17 cents. So I would be very wary of Ford. If you like Ford, and I like Ford, I would look at it's at $14.06. I would look at the $14 calls, right? And where would I go? I'll tell you right now, because I would pay the money. I'd go out to October. $14 calls, October, $1.20, okay? So you're talking about a $15 call, and that right there is telling me by October, they think the stock's going to be $15.20. So, no, I don't like those calls. I wouldn't average down on them. If you want to, here's how you do it, okay? Say you spent $500 on those calls. Now you take $1,000. You buy 8 contracts of that I just mentioned, which are October 15. They're out 99 days. The strike price is $14, so you're already 6 cents in the money. Your break even is $15.20. And if I'm right about Ford and it pops to $19, because I like Ford, they just won an award for electric vehicle truck. They have the F-150. If it pops to $19, the $1 contract that you're buying is going to be worth $500. So you're going to make $120 into $500. That's 4 times your money. That's 400%. So I don't care if these options are beating you up. You need to get out of it. All right, anytime it's Ford spikes. So if you I thought Ford spiked yesterday like 1450. I would have sold your option yesterday and I would have bought out a longer term one. Again, it's not good to sell when it's like down. When it's down, even though you're buying the good new position, it sucks to sell your old position. So your first position, you're looking for a spike to sell. And on the dip, you're looking for the long-term position. All right, next question, please. All right. Do you guys think the market will crash and react to China's aggression? No. So you guys have spoken about this before. You've said this to me. Matt, the Chinese market crashes. Does that mean the U.S. market is crashing, vice versa, whatever? We control it. The U.S. market is top notch. I don't care about the other markets, the EU, the DAX, the this, the that, the French, the CAC, whatever it is. India has a market. The Singapore has a market. Who cares? China's market, Hang Seng, Japan, the Nikkei. I don't care. They don't control it. We do our own things. Our institutions, our banks, our hedge funds, our big money players, they know exactly what they're doing, okay? So they wait on the 10-year, then they wait to see market direction, then they're looking for the best discount or the best play. And when you guys are selling off in the morning, they're buying. By 9:40 a.m., they're done. Then they let you guys sell off during the day. Oh, the market's selling off or it rebounds or it sells off. They don't give a shit, okay? The big money, they really don't give a shit. Then what happens at the end of the day? When you guys sell off enough, which is what happened, when enough retail traders and even shitty institutions sell off, get scared, close out their positions, the big boys, they step in at 358 with their big boy orders because you see it every day right before the market close, and they buy the shit they're looking for. And if you give them the spike the next day, they're going to sell and they're going to take their 5-6%. And if they do it 20 times a year, out of 200 days, if they do it 1/10 of every trading day, they're going to return 100%. How do you think these institutions and hedge funds return billions of dollars, okay? Now, granted, they trade with computers, analytics, so they spend a lot of money. So when I'm here for $3.49 or YouTube is free, please do me the favor. If you're watching this far, please, I want everybody right now. If you can't do that, I don't get why you watch me then. Hit the like button. There should be like 100, 200, 300 likes. I don't ask for much. I ask for $3. I ask for like 50 cents a day. And you're like, yeah, well, you have screwed me in that stock position. Yeah, overall, here's what my platform is about. So anybody new or doesn't understand, the platform is here to teach you skills. The platform is here to teach you rules. The platform is here to teach you about the psychology of trading, to teach you how to enter positions, and instead of watching, how to plan for exits, how to create a spreadsheet, how to repeat it again and again. Well, I have a small account. Well, I can't day trade. I don't give a shit. You have $200. Don't trade for 5 days. Now you could day trade 3 times. I'm not telling you it's going to happen all in one day, but you're going to find the best position. And if it's the only thing you make money on that week, one trade and you make $400 or $500, multiply it out. If you have a small account and I just make $500 and we do it 26 more weeks to the end of the year, that's $13,000. So what? You started with 1,000, 2,000. You're up to 15,000. If you use the spreadsheet, episode 42, all right, figure out max profit and you get an extra 10% in and 10% out, and you make an extra 20% on every trade. So instead of making 11%, you're making 31. Instead of making 20, you're making 40. It's a huge freaking difference. It adds up. The small piles add up. So please, if you don't have the $3.49 because you're watching on a friend's computer in the library, then you can't join my platform. But you can subscribe. All right, Mr. Bacon, you asked this one already. I don't think this one's going to pop. I'd be more cautious than I would be happy about that one. How do we determine or anticipate the stock's low point? Okay, you were spot on with SQNet. Yes. So what I do is I base everything on history, okay? Now, this history was SQ was selling off in the morning. I don't buy pre-market. If I would have even got a better price, I think, right? Square was like 235, was off 4%. So it was off like, what, $8? So it was probably even 237 or something to that. 227. I don't even know what it was. Yeah, 227, 236, 227. The point is I paid 231 flat. I got lucky. I saw where it was going. And as it dipped under 231 or as it was approaching 231, I said 231 is a good price. For net, I almost paid 102.40 and I held and I paid 101.80. Great price. I told you there was demand for these stocks pre-market. So if I see demand for something, and I'm not saying that we're going to turn around today, I could have been wrong. I could have bought those stocks, and I bought 3 stocks yesterday that did okay. What was it? SSSWI. You have to watch my episode from yesterday. If you want to watch my alerts and you're not part of my platform, then you need to watch this. All right, this is the gaming company, right? CRSR should be around like what, $32 or something like that. CRSR. Yeah, Corsair Gaming. So what they did, it was just $30. Then the Reddit boys pushed it all the way up. And you'll see the data was June 14th. You look at the 1-month chart, they pushed it up. And ever since then, it's been selling off. Now, the funny thing is, when it was $29 or $30, Kramer was talking about it, saying he liked it to like 35 or 30 whatever dollars. So I don't want to touch the stock. It's been selling off. Volume is just so super light. Even today was an inflow day, and it lost 58 cents, which means people are still stuck in the stock. People are still selling the stock. Even when it goes up, they're taking the spike. I'd be very cautious with this. Inflow day, tomorrow's probably going to be an outflow day just based on the history of the pattern. I wouldn't be in there. I would stay away. And anything Kramer talks about, I'd stay away, okay? I'm stop giving people grief because it's hard to do what we did. We had 3 tough days in the market, and I felt like people were just like yelling at me or something like that, and I don't like that. Again, that's why I explained the structure of my platform is to help you, to educate you, to teach you to fish. I'm not like those other gurus who talk about a stock. AMC, GameStop. What did I say at AMC? 72, I said it's going sub 50. GameStop, I said it was going sub 200. I think it was 190 this morning. Might have been even less. Point is, I would have secured profit. I don't know where it is now. I would look, but I want to answer more questions. We have a couple more minutes. Let's go ahead. Please, if you missed before, hit the like button. Mr. Matt. Thank you. MyTech, Neo, Square, Plantier were up 2 weeks ago. Held for the long run, but I've missed big profits. What would I do? Okay, so here's the good news. We'll start one at a time. All right, Square, I've already answered. I like Square. Now, what do I think? So I'm in at Square at 231. What's my price target? I think it's like 299 or 301. So that's $70. It's implying a 35% gain. I think it'll be there within 3 months. So most people in the market, when you invest in stock, they're looking for 11, 12%. I'm saying 35%. All right, Neo. Now, the big institutions, I don't think like Neo yet. Now, the good news for you is I think retail investors do like Neo. There was a strong push to make it positive today, even with all the bad stuff. Neo's still a favorite for retail, millennial. Neo's a favorite of a lot of people. A lot of people dislike Neo, dislike the valuation, but I think you're safe there. Plantier, again, somebody told me they came out with earnings the last quarter and they kicked ass or whatever. I'm just telling you what I saw. So people, I'll actually look at the chart. But people were buying mega puts on Plantier, and it happened yesterday. So let's see. It went up 19 cents. There was inflow today. It does look like it stopped the bleeding. Yeah, I mean, again, you need inflow, you need demand. So here's what I do. At 10 a.m., I look at the 1 month chart. You'll see the little smidget. If it's inflow, if it's green, the good news is there is demand. Then you'll see what the volume's at. At that time, you should probably have about 6 or 7 million. If you have 10 million by 10 a.m. and the inflow and it's green, you'll have a tremendous day. All right. What would I have done? Yeah, I always like to sell, take profits. So again, if I'm in options, I have specific expiration dates. If I'm in stock, I probably would have let it. Neo, I had a price target on Neo of $55. I missed the price target, and someone said, "Didn't you hit price target that day?" And I said, "Shit, it hit $55." I didn't plan because I didn't think Neo was going up 10% that day. So what happened the next day? It sold off 10% back to 50. Then it went down to 46. Yeah, I'm still in stock. It would have been so much better if I sold at 55 and I bought back at 46. Right there is $9. It's like 19%. Hey, Matt, thoughts on RM 820? All right, so first off, if you're going to average down on this one, you have $9 calls. I think Romeo is like at $7 and change, right? Let's see what Romeo finished at today. It had a green day today, just. Volume was still real light, so it is sketchy. It was 2.4. Average volume is about double that. So I'd be very cautious with this one. Now, it's at $7.21. So here's what I want you to do. Let's say you have, I don't know, let's say you have 4 contracts and your average is 410. Let's say you have 6 contracts, right? So you put in $660 altogether. That's how much money you put in, $660. If you're going to buy the $7 options that expire $8.20 and you want to average down because $7 is in the money, I want you to double the amount of money. So if you spent $660, you'll double it to $13.20. You'll go out to $8.20, the expiration, August 20th, and you'll say, I'm spending $1,320 and I'm buying the $7 calls, whatever they're at. And of course, you want the best price. If they're selling for like, I don't know, make up a number, 150, you don't want 150, you'd like to get in at 135, 10% discount. You don't play ask, you know. So that's it. I don't know how much money you have invested, but again, episode 37 tells you how to average out. You double your money if you're going to a different strike or a different expiration date. In this case, I would suggest going to a different strike. All right. Hey, Matt, I've got Delta 46. Oh, 46, August 28th, down 6. Yes. So the same question for you. Here's how I'd average down. So you've spent, your average is 218. Let's say you have 4 contracts, which is basically $980, $972 or something like that. Yeah, 72, 972. So you spend double that. So you spend $2,000 and Delta's at what? 41 and change, 42. So you say, I'll buy the $42 calls August 20th. So it's the same date. That way, when Delta rebounds 10% and it's at like 45.80 or 46, whatever, this one's only down 5 or 10%. Your other one, which I'm telling you to average out on, is going to be up 70 or 80 or 90%. So you combine them, you're like 90 plus minus 5. I'm up 85% together. I put in double the amount of, I'm $33,000 in. So I'm averaging up like 50%. So on $3,000, you'd be up 50%. That's why you have to watch episode 37. Figure out how to average down. Double the amount of money. Don't throw good money after bad. If your delta option is strike price 46 and the stock's at 43, I want you in a 42 or $43 option. I want it to fit you better. I don't want it to be extra large. All right, one more question, please. Please hit the like. Oh, we're done. Please hit the like. Please share this video, okay? We used to do like double the live. I know it's a tough time for everybody, but I ask you, if you're watching this and you watch from start to finish, that means you like it. That means you want to learn. That means you're either part of my platform or you're a fan of what I'm doing or you believe in transparency or you're looking to see what stocks I'm talking about. The point is, all I'm asking you to do is subscribe, like. I'm trying to get to 3,000. Please share it, and thank you, everybody. Have a great one.